best case scenario, or so-called best case scenario, it only falls by 20%. And in the so-called worst case scenario, it falls by nearly 2/3 to 494 million. By contrast, the United States is projected to continue to grow. Yeah, I'm going to focus on kind of the medium to long term because I know some of the other panelists are going to address the more immediate issues of what's going on in the property market and the financial system. If you think about China's sort of medium to long term prospects, you have two opposing forces. One is demographics, which are pretty unfavorable, and the other is the potential for continued productivity growth. And so how China evolves is really going to depend on how these two opposing forces play out against each other. Now, with respect to the demographics, the United Nations does population projections out to the end of this century. And in the case of China, the UN baseline projection has population falling by 46% to 771 million people. The best case scenario, or so-called best case scenario, it only falls by 20%. And in the so-called worst case scenario, it falls by nearly 2/3 to 494 million. By contrast, the United States is projected to continue to grow. But you don't have to go to the end of the century to see the impact of the demographics in China. The working age population, the labor force, is already shrinking. And the dependency ratio, the ratio of people who don't work, either very young people or elderly people, to people who are in the labor force is rising, as is in particular the old age dependency ratio, which some people argue is economically more salient. In fact, the only country that has more rapid rise in the demographic, the dependency ratio, is expected to peak at even a higher level than China, is South Korea. The usual pattern for countries like this facing demographic headwinds, such as Japan and now South Korea, is for growth to slow. In the case of Japan, the first Asian country to undergo this transition, per capita income in Japan peaked at roughly 75% of that of the United States and has been declining in relative terms for 30 years. Now, absolute income in Japan is rising, but relative to the US, it's been falling for 30 years. And there's reasons, however, to believe the Chinese experience may be different. Obviously, China is unprecedented in its size. And if it does have, and it has a much lower per capita income, depending on how you measure it, it's 20 to 30% of the United States at this point, which leaves a lot of room for catch-up. When we think about productivity, we often think of it in technological terms, as a lot of the sessions in this conference have been devoted to AI. Indeed, the slogan of the conference is Techno Big Bang. But in reality, most productivity increase is not driven by the application of technology narrowly defined. Rather, it simply shifts in the composition of output, and the shifts in resources from relatively low productivity to relatively high productivity applications. And in the case of China, it still has almost 25% of its labor force in the agricultural sector. So there's a lot of room to shift labor out of agriculture. Plus, as we know, China has a lot of technological capacity. So the potential is there for continued productivity growth. But there are also causes for concern. China has its own industrial policies that try to promote productivity growth. My reading of the academic literature is the evidence on the effectiveness of these policies is mixed. But more importantly, there has been a shift in resources towards the state sector and away from the higher productivity private sector, which my colleague Nicola Varone will discuss in more detail in a moment. And I would simply note in passing that other economies in Northeast Asia, including unfortunately here in South Korea, when those economies have tried to make a transition from a relatively bureaucratized financial system or banking system based on collateralized lending to something more market-oriented, it has sometimes been accompanied by financial crisis, as it was in Japan and as it was in South Korea. So these tensions within the Chinese economy are cause for concern. And finally, of course, there are US efforts to retard Chinese military development, which will inevitably have a broader impact on the Chinese economy, the US, and their neighbors, including Korea. And that will have a negative effect on Chinese growth, whether it was intended to retard Chinese development or simply more narrowly target the military sector. The stakes are enormous. If China were able to reattain recent growth rates on the order of, say, 5% for a sustained period of time, within decades, the Chinese economy would be twice the size of the United States economy. The centripetal pull of the Chinese economy would be immense, and it would have obvious implications for economic, financial, and security arrangements, both regionally and globally. But that outcome is by no means assured. Oftentimes, downward shifts in growth rates accompany kind of dramatic developments. And so it is plausible that the property crisis in China could be one of those downshifts in basic growth rates. And if that is the case, you could be facing a scenario where, like the earlier case of Japan, that China's growth slows. It continues to converge on the United States for some time, but it peaks. And it peaks at a level of income well below that of the United States. And really, only time will tell.